All right, welcome to the live streaming recording of how to buy a home for less than it costs to rent, and the secret that landlords and apartment complexes don't actually want you to know. So, there's a big lie that goes on in the industry that everybody kind of shares and talks about, and that it's that renting is often cheaper than buying a home. And they'll usually come up with a litany of expenses and costs that are generally associated with the purchase of a home. And so, traditionally, as we're told about it, is that for example, on a $150,000 home, it's going to cost us a total of 14,650. And generally, those expenses are broken down into a down payment, which can range anywhere from 3.5% to all the way to 20% down or more, depending on the loan type or the loan product that we are looking at. In the case of conventional loans, generally, you're talking 5, 10, or 20%. Sometimes, even a little bit lower. I think they've come out with 3% conventional over the last couple of years. And then if we're looking at like FHA loans, you're looking at a 3.5% down payment. So before illustrative purposes, I just went ahead and put a 5% down payment on a $150,000 home, giving us a 7,500 dollar down payment to purchase our $150,000 home. And so then when we're paying other home inspections, appraisals, and closing fees between the various things like to fund our escrow account, we're looking at title insurance, we're looking at all these various expenses that are often associated with closing and purchasing a property. For illustrative purposes, I went to go with about 6,250. Closing costs can range anywhere from 1% to 6%, depending on a home's value. It really is going to vary because some costs are going to be variable and then some costs are going to actually be fixed. Like your appraisal cost is going to be a fixed cost, but some of the things like title insurance and things like that are going to have variable costs based on the home's value. So, we're often told it's like $15,000. It's basically really expensive to purchase a home. And in contrast, we're told, hey, go ahead and rent a home, or even an apartment, where you're just going to pay the $100 or $99 in an application fee, a security deposit, first and last month's rent, and then also if you have a pet, you could like a cat or a dog, you could see it easily $100 deposit fee in addition to generally an increased in your rent payment. So this is definitely a big lie, and that's what we're going to kind of go over in this entire webinar here and explore. And I'm going to actually show you how and why it could be cheaper to get into home for less than it actually costs to go and rent. So what if everything you've been told about buying a home is actually a lie? And that's what we're going to talk about. So, who is this webinar recording for? There's generally a couple people who it's for. It's those who want to buy a home for less than it costs to rent. Either an apartment or a house. It's also for people who want to buy a home, but they don't seem to have enough cash for the down payment or closing costs. This is fairly common. Maybe you have a little bit of money saved up, and maybe even you had more money saved up, but then, COVID came around and sort of wiped out all of your savings. And now you're kind of left with, a little bit down, and then house prices keep rising, and it's almost impossible to catch up to saving that down payment or continuing to get that down payment as house prices are climbing or house prices are increasing, and then just the whole pandemic affecting a lot of us financially. So it's also for renters who are tired of having their rent increased every year. Just like home values have been going up, rental values I've seen have been increasing over the years as well dramatically. And it stinks when your landlord continues to ask for more money or charges you more money every year, and yet the service doesn't improve, right? Like they don't fix anything. They're hard to get a hold of. And when we're talking like basic repairs, you can't get them to fix basic repairs, and perhaps they even promised things to fix things after you moved in, and yet Those haven't been done, and yet they're asking you for more money every year. And so this webinar is also for those who wish to take advantage of the current real estate market price increases. We're seeing market values like over the last, 5, 6 years have been going up in value, as well as recently they've been really climbing with inflation and other various factors. And so, I mentioned it's for people who might not have enough down payment, but it is also for people who have enough in down payment, but you want to save your cash for perhaps renovating a home or keeping it for an emergency. This is a big one. Like the home buyer who's out there who probably has enough for a down payment and to pay closing costs. They could use this for being able to if they purchase a outdated home, maybe it's a home that went through probate, or the homeowner recently passed away and the kids are trying to sell the property. A lot of times these houses are outdated, old carpet, old paint, and all of that's going to cost money to fix up. And you're probably going to go a DIY route, but having that extra cash reserve allows you to purchase a home like this and ultimately, fix it up to your liking. And that can be a strategy too for in this market where real estate is really competitive. A lot of home buyers are out there avoiding these kind of home houses, especially as first time home buyers. Right? It's kind of a big ask to be able to purchase a home for a down payment and then to try to have to pay for all of the repairs. And as a result, a lot of these, perhaps first time home buyer homes that are outdated or need a little bit of work often go for less than asking, and often don't have as much competition on them as, say, a normal, fixed up, ready to move in property. And so those normal, ready to move in properties are often seeing multiple offers, offers well over asking. I had a property for perfect for a first time home buyer just a couple months ago. I listed it for 124.9, and all the offers that came in were in the 130s, and the offer that was ultimately accepted was 135. So it's important to keep in mind that when we're trying to purchase these ready to move in homes, we're facing a lot of stiff competition, and that's why understanding and learning the lessons in this webinar could actually help you out, if nothing else, to be able to compete better in the housing market. So, um, you know, it's also for people who have been told by other lenders or real estate agents that they can't buy a home because of their low down payment or not enough cash and stuff like that. So, and it's for folks with bad credit, no credit, okay credit, good credit. We're going to talk a little bit about credit scores and the impact of different lending options, but we'll look at that. And it's those who want to become homeowners but don't think it's possible because of their financial situation. And so, because a lot of the things that we're dealing with in this webinar are related to Michigan real estate, it's also important to that you're a person that you're looking at to actually purchase a home in Michigan. And so, if you're not in Michigan or you're out of Michigan and you happen to be looking at this webinar probably isn't for you. It's going to be specifically for people who live in Michigan and are looking to purchase a home in Michigan. So all that said, who am I? I'm Alex Craig. I'm a Michigan real estate agent. I've been helping home buyers finally purchase a home for less than the cost of rent. I've been doing this for about 4 or 5 years now. I got my real estate back in license. I believe it was back in 2017 there. So I just want to talk about a little bit about my personal experience. I wasn't aware of my options. Just like everybody, I bought into the big lie that it costs more, it costs a lot to buy a home than it does to rent. And so I rented. I rented for a really long time. I rented for 7 years, and I dealt with all of the usual bull and baloney. Um, and I actually had in one of the apartment complexes that I was in, I had a noise complaint filed against me from a neighbor because my toddler is playing outside too loud apparently. At the time, my kids were I believe it was like 2 and 3. I believe they were, but yeah, they would go outside. They would be kids, and all those apartment complexes were pretty close. And so in the spring, everybody would open up their patio doors and let the breeze come in, and my kids would hang out near this patio section, and they're 2 and 3 years old, being as loud as 2 and 3 year olds are, and sometimes throwing fits outside, and you name it. But yeah, so I got a noise complaint filed against me, and that's kind of when I decided, like, okay, I've had enough. I'm done with this BS. I need to figure out how to buy a home, have my own property. Because this wasn't cool. And so over those 7 years, I factor in, I probably roughly paid $75,600. Now I don't know the exact amount, but it's ballpark within range for that. And that's a lot of cash, obviously, that I paid. And over that same 7 years, I realized that if I had bought a home, if I knew about these programs, I probably could have bought a house for 115, and that house today would be worth 185, and that's conservatively with the way that house values. It would probably be even worth more, but I'm just going to say 185. And so at the end of like my 7 years, I paid 75,600, and I missed out on $50,000 in appreciable value. So I figure the factor of like me learning this essentially cost me, and not knowing about this cost me about $125,000 for the entirety of that, and missing out on it. And when I think about it, I just want to cry, and that's what I'm hoping to help people do and help people avoid, so they don't get caught up in this lie and miss out on the opportunities that home ownership offers, and that they don't get caught up into believing the lie and continuing to rent, when there's a lot of opportunity and value in owning a home. So like I said, I thought I had to rent, and this was before I became a real estate agent. And I mean, even today there still really isn't, but back then, there really was no real estate agent or lender talking about these kinds of programs. And it stinks because I really missed out. And so, um, just a little bit more about my real estate career in terms of my experience is that I'm a top recommended realtor on realtor.com. You'll find me highly ranked for different things like MSHDA, and MSHDA loans, and real estate agent on Google and YouTube. And I'm a top publisher on MSHDA loans and how to help people buy homes for almost no money down in Michigan. And the point is, I'm not saying all of this to brag, but that I have experience in the subject matter that I'm sharing with you today, and that I'm not just some guy trying to share this and push you into something. So, with that said, let's kind of get into the meat of the content of how to actually buy a home for less than it costs to rent. So, the main strategy that we're going to use is actually what we call the MSHDA loan, and so that's primarily what we're going to be talking about here is the MSHDA loan and down payment assistance program. And so the MSHDA loan stands for the Michigan State Housing Development Authority loan. It's a loan program that is put out by the MSHDA, the Michigan State Housing Department Authority, and the down payment assistance program. And so there's two different kinds of down payment assistance programs that the state of Michigan offers for eligible first-time home buyers, and that's the ability to get up to $7,500 or $10,000 in down payment assistance. And this money can be used to pay for your down payment and your closing costs. And the best part is, all it requires is for you to bring 1% of the home's value to the closing table, or to purchase it in some of eligible purchases like the appraisal. So, I give you an example for the 1%. A $150,000 home, like we required, is actually going to only require $1,500 cash given the program. So, assuming our down payment assistance pays for everything and we're able to get away with it, you would only have to bring $1,500 cash, to buy a home. I mean, we just looked at the cost of renting being like almost $4,000, and that's like 1 month's worth of rent. And so on a $200,000 home, we're talking $2,000. I mean, to me, that's just crazy. I mean, where else are you going to be able to do something like that? And so, I, comparing this to the big lie that I shared with you in the beginning of this webinar, I want to break down the chart again that we look at the rental cost around 3,949 just to purchase, just to get into, just to be able to move into that apartment complex or to that house or something that we're renting. And then, in contrast to a $150,000 home using MSHDA or the DPA, and with the down payment assistance program, uh, assuming we're eligible for a 3% conventional, which is totally possible, we're able to use the DPA, qualifying for the DPA at $10,000. We're able to use that entire $10,000 down payment assistance to pay for the down payment. So, in other words, we're not paying anything towards the down payment at all whatsoever. And then all of those closing fees, again, boom, wiped out, zero. Why? Because we're bringing some money towards our earnest money deposit, which is the EMD, and then we're paying for an appraisal and a home inspection. And so all in, we're basically the cash that we're going to have to put up front before we get to the closing table is $1,900, guys. So about $2,000 roughly. But at the closing table, you're going to be eligible to get some of that money back based on the way the numbers worked. So you would actually get cash at the closing table. You would walk away with a check for $250 and the keys to a new home, bringing your total cost of ownership to $1,650. That's I don't even care where you go. It's almost impossible unless you're going to go rent a studio apartment for $600 a month, and maybe you can get in there cheaper than buying a house, certainly. But then we're comparing apples to oranges and not apples to apples there in that case. And so if it's like one of the things I often get, or the objections or pushbacks I often hear is like, okay, if this is so good and there's so much value in it, how come agents and lenders aren't really talking about this? Why aren't more home buyers or first time home buyers educated on this? And that's a really great question. And I think for starters, the one reason is that there's a lot of misinformation out there, and there's a lot of myths when it comes to MSHDA and the down payment assistance program, like who qualifies, where it can be used, and more. And so a lot of real estate agents and lenders don't take the time to sit down and learn about the program. Lenders are busy pushing, different programs, FHA, conventional, all those loans without the down payment assistance program. And you have real estate agents out there who are hesitant mainly because of a misunderstanding about where the MSHDA loan can be used. There's a lot of people who believe that real estate agents, sadly, that the MSHDA loan can only be used for certain zip codes or certain cities and counties within Michigan, which just isn't true. There are differences in the eligible down payment assistance program, but a MSHDA loan and down payment assistance can be used anywhere in the state of Michigan. And so it's just a lot of misinformation, I think, that lenders and real estate agents have. And so the second reason is there's like a few extra steps involved in the process to be able to get approved for this loan program. And sometimes I think that the one or two extra steps scares real estate agents and lenders because they just want to close. Unfortunately, they're just trying to get to that commission check, just trying to get to that paycheck, rather than stopping and asking, is this what's best for the home buyer? Am I educating the home buyer? Am I giving the home buyer all of the information to empower them to make the right decision that they need, that is right for them and their financial situation? And that's one of the things I believe, as a real estate agent, is really empowering home buyers with information and options so that they can pick the right one that's best for them. For you, that could mean a MSHDA program and the MSHDA loan with down payment assistance program, or it might not be, and that's okay. But it's understanding your different options. But unfortunately, a lot of agents are just say, okay, you got the conventional loan, let's go close, like let's go get you a home, and that's that. So, or oh, you don't have enough down payment, sorry, come back to me when you have $5,000 or $10,000 in your bank, then I'll show you houses. And to me, that just stinks. If I as like if I was a home buyer out there, I would certainly hate that. And that's why I offer my services, to change all of that. And so the third reason is that there's kind of a negative stigma to the MSHDA loan as well. A lot of times people say, "Oh, it's only for poor people," or "It's only for low income people and people," and yeah, that like low income definitely benefits for it, but like by and large, according to MSHDA definitions, it's like then like middle class and even upper middle class like fits the bill. If you assume the national household income is like $50,000 to $60,000, then well over half of America qualifies in Michigan qualifies for the MISHDA program because you can make up to like $94,000. It varies depending on the zip code that you're in the city, but like you can make a significant amount of money or what's deemed a significant amount of money to be in middle class and still qualify for this loan program. So in any cases, it is not just for low income or poor people or whatever that the misinformation that gets spouted out about this loan program. And so like I said, it's a far cry from the national average. So even if you make $80,000 a year, you're doing well above the average Michigan household, and by far would put you into the upper middle class. And yeah, and you would still qualify for this MISHDA program. So, again, so what's kind of like the requirements when we're looking at the MSHDA loan to be able to qualify? There's the 1% rule, keep in mind, but it gets better because I told you that that 1% needed to be of the purchase price needed to be invested into you purchasing this property. So on a $150,000 house, that meant we had to bring $1,500. But here's where it gets better is because the overall investment doesn't have to come from you. It can actually be a gift, generally from a parent or a grandparent, for example. So, realistically, if you're able to get a little bit of a gift from parents or grandparents, this entire program, using this entire program, might cost you nothing. It might cost you $0. And I mean, just think about that. You could get in a home for way less than an apartment and almost no money out of your pocket if you have parents or grandparents who are willing to help. So, because you're required to make that 1% investment, I do want to go over to keep in mind when that 1% investment is sort of due, when you might have to have some cash coming out of your bank account. And this is important to make sure that you're ready because it doesn't all happen at the closing table when you're ready to close on the home. You're going to actually need to have a little bit of cash reserves up front. And so one of the first expenses you're probably going to pay is your earnest money deposit, and that's due upon the acceptance of your offer. So as soon as your offer is accepted, you go out, you write offers, it gets accepted. You're gonna have to pay an earnest money deposit, and this earnest money deposit is also called like a good faith deposit, EMD. You'll hear it by different words, and the money goes and sits in an escrow account, and it just shows that you're interested in the property. It's a good faith deposit to sit that you're agreeing in good faith to purchase this property. Now, there are ways that if you cancel the agreement, maybe you go through the home inspection, you don't want to buy the house, there is ways to get that money back, but it's not fully, risk free. There are, if you aren't careful to follow the terms of the agreement, you could miss out on the earnest money deposit. But the earnest money deposit is due. Again, this could come from you, or this could be a gift from a family member. In general, we like to see around 1% of a purchase price, or a minimum of around 500. But usually, the more the better. So if you're purchasing a $150,000 house, we tend to like to see an earnest money deposit of around 1,500. And then your inspection, as soon as your inspection, you're going to need to complete that inspection within usually 7 days or so after your offer is accepted. And depending on the number of inspections that you do, this could range from, $300 for a basic home inspection all the way up to $1,000 if you're doing home, radon, pest, sewer scoping, the whole, list or litany of different home inspection options. So, and your appraisal, you're gonna after you do your inspection, you're gonna have to pay for your appraisal. It's usually around $500 too. The point at which you pay could vary depending on your lender. There are some lending companies where you'll pay for the appraisal at the time of closing, but a majority of them tend to collect it up front before you're closing. So, so you're looking at your earnest money deposit, your inspections, and your appraisals. You're typically looking at paying all of that prior to the closing table. And in the example that we looked at earlier, in this case, you're essentially investing your 1% well before you get to the closing table, and as a result, you could actually be eligible for getting money back at the closing table by the time that you go to close on the property, and the time that the down payment assistance program kicks in. So keep in mind there are ways to work around this. There is some negotiation room. The earnest money deposit, that's pretty much like you can change the amount, but you can't change when that's paid. As far as the inspection and appraisal, there might be some inspectors, appraisers, lenders, and agents who are willing to work with you in your situation and understand the situation and are willing to collect the cash at the time of closing instead. So it's definitely possible to avoid inspection and appraisal costs up front, but it's generally not a common practice, but not impossible. You'll just have to ask your lender, your agent, your appraiser, and your inspector if that's something they're willing and able to do for you. So how do you qualify for a MSHDA loan? How do you know? Maybe you've raised your hand. You said, I'm definitely interested in this program. How do I get it? Am I eligible for it? So some things is that to keep in mind is there is a maximum sales price limit. It's generally around $224,500. Again, this is going to vary based on your zip code and region. Where house in areas of Michigan where houses are more expensive, the maximum sales price is higher. In areas where it's lower, then it's obviously going to be lower than possibly the $224,000, 500. So keep that in mind. Depending on where you're buying, there is going to be a maximum sales price. What that maximum sales price is going to vary based on your location. But at 224.5, at least in my area and a lot of areas I know across Michigan, that buys you a pretty good home, pretty solid home. It's probably more than you would need for a first-time home buyer. So unless you uh, just have a lot of stuff or something. So, minimum credit score you need to have is a 640. That needs to be for everybody inside of the household. So, if you have yourself and a spouse and other members like maybe grandma or if something a case like that is living with you, every member of the household has to have a 640 credit score or above. So, and then also you have to take a home buyer education class as part of it. You can do these for free through HomeView. There's also some credit counseling agencies through MSHDA that offer these classes, but they tend to charge some money. But so I don't, why pay when you can get the class for free? And then lastly, you have to intend on this being your primary residence. You can't, you can't be trying to buy this as an investment property or or whatever else. It has to be your primary residence. So as long as you have the mortgage, you have to live in it. You're not allowed to make your primary residence and then move out a year later and turn it into a rental and still have this MSHDA loan. So now, generally, the kind of like caveat, or when I share with it, have to have a 640 credit score. I get a lot of people, well, I have bad credit. I don't have that credit score, and I definitely understand that. And unfortunately, for the time being, you're going to have to work on it. You're not going to get approved above, for below a 640 credit score. But that doesn't mean you can't buy a house. I don't want you to feel self-defeated because there are MSHDA approved counseling agencies and credit repair companies that can help you become home buyer ready and give you advice on how to improve your credit score. There's some counseling agencies, their whole entire goal is to get you to be home buyer ready within a year. So maybe you can't purchase it today, but their goal is to get you to be ready 12 months from now. And if you stay diligent and you execute on the advice that they're giving and work with the counseling agency, ideally you'll be able to get there. But for now, some general tips that I can give you when it comes to just credit is making sure you're making payments on time. If you have any debt, try to pay it off or consider paying it off, and avoid opening a bunch of new accounts and stuff. So but it's definitely, unfortunately, if you have bad credit, something that needs to be worked on. And um, so back to kind of like why MSHDA works, and I also want to talk about why MSHDA works even if you have cash, because maybe you've been watching this and you're like, hey, yeah, I have enough money for a down payment, but this MSHDA program still sounds really great for me, and we already kind of looked at and highlighted about saving money to for making repairs because in this current market, a majority of homes are sold as is. They're not going to do any repairs. I mean, 5 years ago, 6 years ago, they might have put forward a little bit of money to making repairs, but now pretty much all homes are just sold as is. Take it or leave it. Good luck. And, that leaves you with the bill for making a repair on a house if it's needed, and especially if it's an outdated house, that can be problematic. And so, the MSHDA loan allows you to use the MSHDA for the down payment, allowing you to save your cash instead for making the repairs, making any updates that you would like. But the second thing is that we can also use this MSHDA loan to cover appraisal gaps to win homes. One of the things that's happening out there is homes are selling above asking, and in some cases, even selling above appraisal value. So, I'll give you an example of a property that I saw just the other day. Um, the property was listed for 155.9, I believe it, or 154.9, somewhere around that ballpark range. All of the offers were above asking, so they were all above 155, 156 or so. And the appraisal came in. Unfortunately, the appraisal came in low. The appraisal only came in at 150, but because of an appraisal gap, the house is actually going to end up closing at 152, and so you can see that MSHDA can help with that. So imagine if you're trying to buy a home and you have just enough for a down payment and closing cost, but to be able to offer more money, to cover that appraisal gap is going to make your offers more competitive and allow you to ultimately win out on some of the offers and the competing offers that we're seeing and we're experiencing in this market. And so, the MSHDA loan can be used to kind of cover these appraisal gaps if the appraisal ends up coming in a little bit lower than the home, offer price, asking price, and if the uh, seller in this case isn't willing to budge on uh, you know dropping the price to the appraisal value. So that's definitely something. Another reason why the MSHDA program can work even if you have enough cash for a down payment, because unfortunately, until the market softens a little bit, we're seeing houses sell for pretty high prices, and sometimes that means asking well over offering, and sometimes I've seen $10,000, $15,000 over asking. Like I said, I listed my property a couple months back for 124.9, and all of my offers were in the 130s up to 140. That's 10% or more. That's $15,000 over what I was even asking for it. So that's something to keep in mind while you're out there searching. So, how do you get started? If you're interested in looking at a MSHDA loan and wondering if you qualify, is the first step to buying a home with MSHDA is getting qualified. Now, we're going to let you in an opportunity to go ahead and join us for a 15-minute, no obligation conversation to just learn more about MSHDA and ask any questions that you might have. If you qualify for your specific situation, and that we kind of didn't really cover, or maybe things that you're wondering, and we are going to share that link with you about how to schedule and qualify. But you'll basically go to a calendar, you'll just select your date, input your information, and we'll get sent an email to on the availability to go ahead and schedule your conversation with you. So, and this isn't a high pressure sales call. We're not going to try to, get you to, commit to us and get all these agreements. Honestly, the point of the call is to just see if we are, if we can help you, if a MSHDA loan makes sense for you in your situation, and educate you a little bit more about your situation and how MSHDA might be able to help you. And then at the end of the call, if it makes sense, a lender is going to invite you to fill out an application for a formal approval to see if do qualify indeed for the loan based on your income and your credit score and all that information. And once you're approved, you're off to the races to start looking at homes with an agent, and hopefully they're finding your dream home. So again, if you're interested, book a 15-minute call with us. We'll be able to give you a personalized sort of custom plan for how to move forward, and what might make sense for you. So yeah, so that's it. That's the end of our webinar recording. If you do have any questions, like I said, you can definitely go ahead and reach out via the webinar scheduling, or also just feel free to reach out to us. I'm going to provide phone and email in this recording in the description here so you can find it. But just real briefly, it is number is 517 244 6044. You can give us a call or send me an email, Alex Craig. And then you can send me an email at realtor, REALTOR, at dolinsky.com, DOLINSKIGROUP.com. So again, phone number 517-244-6044, and we'll be happy to assist you, get you going, answer any questions that you might have, and see ultimately if this MSHDA program is right for you. And if not, hopefully direct you to an alternative solution that might be great for you. So I just want to thank you for taking the time to watch this webinar.